You're looking at a daily chart of the Nasdaq, and it's a stock picker's market, so I don't really pay too much attention to the index. But I just wanted to point out that the prior high for the index was 12,269 on February 2nd of this year. And during this most recent rally, it has not been able to recapture, retake, or trade above that February 2nd high of 12,269. Now, maybe it will this week if Apple reports a good quarter or whatever, if the index decides to trade higher. But it is making higher lows. It just cannot get above the 12,269. Well, the QQQ has traded above, and this is an indication that the large cap stocks, on the index, it's 313.68, and it closed Friday at 322, so it's well above because of those large cap technology stocks, and the Nasdaq 100 are outperforming the index. And so just wanted to point that out. I typically, when I want to just own the index, I'll just buy this, which is QQQ on steroids. It's the 3 times the QQQ, so it's TQQQ, which is 3 times the daily performance of the Nasdaq 100. Anyway, that's enough for the index. It's earnings season. I want to get into earnings, and we can expect during earnings season that there are going to be gaps higher and gaps lower with the new data points, and analysts kind of refiguring their numbers here for these companies. Meta, now they didn't report anything great. This is pretty lackluster earnings, but there was too much caution coming into the earnings season. The market was very cautious and fearing the worst, and they didn't report the worst. So these are better than feared numbers. And so the stock gapped up. We're seeing very few stocks gapping up, most of them gapping lower on lowered forward guidance, but Meta Platforms is one. So congrats to the longs and Zuck for laying people off and having his stock go higher. That thing's been a double, more than a double since the lows, and a double in 2023. Microsoft, again, okay numbers, double-digit EPS growth, which is great. And then, 7% sales growth, and their Azure, cloud services is growing, better than expected, I guess. So this gapped higher too, and you got to pay attention to these gaps higher. It was up at $19 or 7.24%, with more than 100% above average daily volume. So good for the Microsoft longs. And then the Flying Burrito had they're passing on higher costs to the consumer. The consumer's eating it up, no pun intended. And this one was up 12% on nearly 500% above average daily volume. So that is not to be ignored either. Those are some of the gaps higher. We saw plenty of stocks gapping lower, though. A lot of the semiconductors were plunging. This is a nice, 39% haircut there. And that's got to be painful. I mean, you're giving up, months and months and months worth of gains, like 8 or 9 months worth of gains here. So sorry for the longs there. Congrats for the shorts. Net was another one. I believe it was down, was it 21% on Friday? That's a nice haircut there. And they don't have any earnings or sales growth to really talk about. 8 cents, not a lot. They got this PE. It's these high valuation companies are going to get a haircut. They have to have a little better sales and earnings growth. Pens was another one that got hammered on earnings, and so it's earnings season, and you got to pay attention. You got to protect yourself as you're going into these numbers here. Wolf is another one on the semiconductor side. You can't even see this thing as gap. So what was it? Nearly 20%. Yeah. So anyway, there's a lot of them. I could keep doing this, but I'm not going to. I'm going to go to CROX, and I'm going to talk about formula that I have for holding into earnings. What kind of a cushion. What I do is I take the worst day of the year going back for the last year, and for CROX it was like 10%, and it did it several times throughout the year where it was down 10%. And I don't know, I'm not going to find each one, but it did it like 4 or 5 times but it was like 10% every time. There it was right there, 10% on May 9th. And so, yeah, what I do is I take the 10% and add a 5% stop loss. You might want to add, 7 or 8, depending upon your tolerance. So you take the 10% worst day, add on to the stop loss 5, 6, 7%. So 15 to 17% cushion going into earnings. If you don't have that, then you shouldn't be in this, or just be very, very small. And you can see it had a 16% haircut on Thursday after earnings. So all these people that bought heading into earnings and didn't have that cushion, they're underwater. And if you had that 16, 17% cushion, you gave up your profits, but you didn't lose. You weren't hammered, like the people who bought in here. So anyway, they announced a shortfall for the next quarter. The analysts expected $3.27, and they lowered it to $2.95. And it's just a little game they play. They want to crush earnings, so they'll probably come in around 327 and surprise, beat lower expectations. They just want a surprise. And that's a game played on Wall Street. They want to crush earnings, and they did raise the high end of their year guidance from $11.31 to $11.73. That's a nice 42-cent year gain, but nobody wants to wait a year, and if they lowered expectations once, they can do it again. So a lot of uncertainty here with CROX, and I can understand why it sold off a little bit. I think it's fine, but just back to the 120, a company earning $12, trading at 120, that's a multiple of 10, and growing EPS at 20%. It's done that for a long, long time. So maybe, investors think that it won't be 20%, but you can see the EPS here. The last 3 quarters, 20, 23, 27, well, they're probably going to grow 20% with a multiple of 10. That stock's still cheap, but nobody wants to wait. Nobody wants to be patient and wait. So if you're a long-term investor, yeah, it's probably a decent, wait for this thing to form a base and take a swing at it again. But if you're a trader, you got to DD Mao. Anyway, that's enough of that. I'm going to look forward to earnings this week. A couple of stocks that I'm looking forward to is TGTX. They announced on Friday that they're going to report on Monday morning, and I think this is mostly short covering, getting the heck out. It was up nearly 10% after hours. Could be people jumping in ahead of they think is going to be really good earnings, or maybe a buyout, but I wouldn't be buying into earnings. I think that's really silly. I would hope that's mostly shorts getting out and protecting themselves. Anyway, after the bell, a couple more stocks that I'm interested in. This is Vertex Pharmaceuticals. You can see the base on base pattern, the neighbor base, and they broke out here. They had good news on a drug trial last week, I believe, and they report earnings on Monday. So just a killer stock for a long, long time. I mean, if you go to the monthly chart, you can see, lower left to upper right. This has been a great stock for a long time. So I just want to hear what they have to say on their earnings call. Arista Networks is another one that's reporting Monday after the markets close, and this one has been a big winner. You can see this cup here, late stage base. You can see that now it's consolidated ahead of this earnings, pulled back to the 50 here. We'll just have to wait and see what they have to say on Monday afternoon. And then Tuesday morning before the bell, INMD. I'm interested in this company. It was a big winner in 2020 and has just traded sideways. You can look at the weekly here and see it's made a big run and it's traded sideways here in this stage 1 base. If you listen to the Intuitive Surgical call, they said that elective surgeries were up. Their Da Vinci machine globally was up 26%. So the elective surgeries are back. So I would think that InMode would fall in line with Intuitive Surgical and have a pretty strong report, but you just got to wait. That's before the market opens on Tuesday. And after the markets close is Supermicro. Now they pre-announced a shortfall, and they said it was due to component shortages. And you can see it sliced to 50. Then on Friday, it ran right back through the 50 ahead of earnings on Tuesday. They said the component shortfall had been fixed, so there shouldn't be a problem going forward. But we'll just have to wait and see and listen to what the leadership has to say there. Then on Wednesday, before the market opens, we have Wingstop, one that I'm interested in because the restaurants have been doing very, very well. I mean, if you listen to McDonald's or any of the if you've been paying attention to MasterCard and Visa, they're saying that the restaurants and people going out to eat and traveling, and this is an area that's been very strong recently. So I would think that they would have a good report. It's been consolidating in a base here, tried to pop out last week, but you're just going to have to wait for the data on Wednesday morning. Another one that I'm interested in is PERI. This one took a haircut here on last week. It's been traded below its 50 all week, so I'm very interested to see this one rally back through, hopefully with good earnings on Wednesday morning before the market opens there. They're going to announce. So it's just a little bit of caution here ahead of the earnings. We'll have to see what happens, what management says. And then another one that I'm interested after the bell on Wednesday is Solar Edge. Solar's been out of favor in phase, and First Solar really got crushed with earnings. Sorry for the longs there. They had a great run for a long time, but that dragged down the whole solar sector. In phase did. And then First Solar followed up on Friday with the disastrous earnings call. Anyway, enough of that. Thursday morning, the king of the weight loss drugs here, Wegovy and Ozempic, reports Thursday morning. And if you listen to the Lilly conference call, then you know that their weight loss drug just smashed all expectations. So I would expect the same thing from NVO, but you never know how the stock's going to respond. You never know. So you just got to be careful. I'm going to use my 15% rule. I believe this lowest day was back here. I don't want to get too bothered up. 12%. That's right. With a say adds 7 or 8%. Say you should have a 20% cushion heading into this thing on Thursday. That's my formula. DraftKings Thursday after the bell. This one's setting up at a nice base here. It's been on our ready list, our watch list, pulled back to the 10, and you're just gonna have to wait. I would think they would be doing well, but I've thought that for a long time. The stock's just been kind of meandering here in the 20 level, and below 20. And then, of course, the big kahuna, Apple, they report. If you listen to Microsoft and Google and Meta and those big cap techs, you would think this is a well-managed company, well capitalized. And every time it sells off after earnings, it gets bought up. So it just turns into an opportunity. So we'll just have to wait and see from Apple. Anyway, that's all I have for the week. Good luck next week. Like I say, you got to have that cushion going into earnings, or else you could really get hammered. I want to go back to Mr. CROX. This was back in 2007, and this is why Mr. Webster calls me Mr. CROX, because I was too big position size going into earnings back in 2007. Got hammered, 36% loss. Yeah, it was about 50 grand worth that day, which inflation adjusted is about $10 million now. Anyway, yeah, don't get too big going into CROX. So I know people are giving me a hard time on Twitter, but I learned my lesson back in 2007. You can't get too big going into earnings and getting too cocky. Anyway, I just on this, I had lost profits. I didn't take a loss, but it was a lot and it hurt. And I don't do that again. So fool me once, shame on you. Fool me twice, shame on me. So we always sell stocks when we have a 5% loss. That's a rule, and we don't break the rules. Anyway, have a great weekend. See you Monday. Never give up.